Okay, so the pair that I want to speak about today is GBP USD because it's a very interesting pair that has the possibility to provide a very good trading opportunity in the near future. So I definitely want to speak about it because the analysis as a whole will also be very educational because it will show you exactly what you have to be looking at when you are analyzing the market for a potential trading opportunity. Now, as you know, GBP USD has been a very predictable pair lately, providing some very good trading opportunities. And I will also guide you through a recap of the previous analysis that we had provided for the pair that worked out perfectly. So before I show you what we have at the moment and how we can be looking for the potential trading opportunity, let's just give a quick educational recap. Now, if you remember, the first time that we spoke about a GBP USD lately was after the market had created this W formation. After this W formation, what did we say? We said clearly, we have a market that is retesting this level here, which is a very strong previous support here, which is now turn resistance, and we want to see from here the market make a nice move to the downside, which is exactly what the market has done. Then again, after the market had created this M formation here, what did we say? We said after this M formation from here, from this very important demand area, we want to see the market complete the pattern at the neckline, aka at the previous support, which is now turned resistance. So this level here, we wanted to see the market complete the pattern at this level here, and that is exactly what the market did. Then again, we wanted to see from here the market make this move to the downside, and in fact, if you remember, we obviously capitalized with students on this wave to the downside. And then again, we spoke about GBP USD after the market had completed these 5 waves. So 1, 2, 3, 4, 5. After 5 waves, you want to see a complete shift of the direction. And in fact, that is exactly what the market did following our analysis. And the market definitely created a higher high, creating this W formation here. And if you remember, 2 days ago, I made a new breakdown on GBP USD telling to all of you from here, we definitely expect the market to make a move to the downside. Why? Because if you have a W formation in the market, so an impulse, a correction, lower low, and higher high, what do you want to see in this case? You want to see the market make a move to the downside and go to test this level here, which is basically the previous resistance, now turn support, aka the neckline of the formation. And in fact, that is exactly what a GBP USD did, complete the pattern at the neckline, exactly as we wanted it to do. So at this structure level. And in fact, with students, we capitalized on a nice day trade, in this case to the downside, for a 1 to 3 risk to reward using our day trading strategy. So we had as well a very good 1 to 3 risk to reward also on this move to the downside with students for GBP USD. And I will link all this previous analysis that we had performed all in description, so you can go and check them out for reference and for more free education. Now let's speak about the situation that we currently have as we are speaking on GBP USD, and obviously we will also check what we have from a COT perspective on GBP USD to see what the biggest banks and institutions are currently doing in the pair, so checking their order flow, the way in which they are positioned in the market. Now let's start the breakdown as usual using a top-down approach. So starting from the monthly time frame going all the way down to the 4 hours. And always remember, the best time frames for direction are the monthly, weekly, and daily. And the best time frame for entry is the 4 hour. Now starting from the monthly time frame. On the monthly, we clearly have a market that has created a very strong layer of structure support at this area. In fact, this level here supported the market for this very strong and long trend. Again, from here, the market clearly rejected the zone to the upside. And again, here the market has respected its zone, creating a rejection to the upside. Going down on the weekly time frame, let's see what kind of situation we currently have. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to cover or analyze in the next video. Now, from a weekly perspective, we have a market that clearly is at a very important structure level. In fact, we had previous support here, turn resistance here, again resistance here, and again resistance here. If you remember, I forgot to mention this, but also from here we wanted to see this move to the downside, and we capitalized also on this move to the downside. I will try to find also that previous analysis and link it in description as well. Now from here we definitely wanted to see with the last analysis that I published 2 days ago, the move to the downside, right? So we had further confluence, not only the daily W formation that I just showed you, but also weekly structure, and this weekly structure is still active right now. So at the moment, just recapping what we just said, on the monthly we have strong monthly support, on the weekly we have strong weekly resistance. So important to say that the market is kind of trapped inside of the monthly support and weekly resistance. Now, just to look at the bigger picture, okay, what is actually going on here? We had a huge impulse to the downside. Now, in general, if you have an impulse and you want to measure the retracement, what are you supposed to be doing? Taking your Fibonacci from the high to the low of the impulse. And what we can clearly see, we can see that the market has rejected the 0.786 very precisely. It hit the level absolutely to the pip and rejected to the downside. And now the market is in between the 0.618 and 0.786 currently, exactly at the 0.618. Going down on the daily time frame, what do we have? Now on the daily we have a market that, as we said previously, has just completed a pattern. Now obviously the completion zone of a pattern is a strong structure level. That is why we took our profits here. We took our profits here because this is also a pretty strong support area. So previous resistance here now turned support at this zone. So can we be looking for the continuation to the downside? Obviously not, because if we would be looking for the continuation to the downside, we would be shorting at a daily support. Now, shorting at daily support is never ever a good idea. Even if the market can't break that zone to the downside, you want to always position yourself with the best probabilities and best risk to reward. But if you short at a daily support, you do not have a good probability, nor you have a good risk to reward. So we definitely do not want to short from here. At the moment, the market is above the level, and as we have just seen on the weekly, very important to say, we are at a level where we have exactly the 0.618. However, the market is approaching the zone from the upside, meaning that at the moment the 0.618 is actually acting as support. Very important to say this. Try to follow me. So we have on the weekly, even if we have structure resistance, we have Fibonacci support. And on the daily, we have daily support at this level, which is the completion zone of the pattern. So actually, we have a confluence of support here. And if you look closely, the pattern that we actually have on the daily is a bullish pattern, because from here we have an impulse, a correction, and after an impulse and a correction, you want to see the continuation to the upside. So actually, the situation at the moment is pretty bullish from a directional perspective. Now, before I show you how we will be approaching this with students, let's go and give a quick check at what we have from a COT perspective, so commitment of traders. What the biggest banks and institutions, so the speculators, the non-commercials in the market, so the hedge funds, are currently doing and how they're positioned. Now, if we check the COT data, we can see that we went from 35K net positions all the way down to minus 36K net positions. So we went from having way more longs than shorts from an institutional perspective with 76K longs and 40K shorts to a situation where we have way more shorts than longs with 63K shorts and 26K longs. So from having way more longs than shorts to having more shorts than longs. And in the short term, however, what we can see an increase in the net positions from minus 36K to minus 16K. In fact, if we check the exposure Okay, if we check the exposure of the hedge funds, we can see that we went from a 14.2% long exposure all the way up to a 22.1% long exposure. So clear shift to the upside in the long exposure with 5.4k longs added with the last report alone. So clearly GBP USD is looking quite bullish. However, we cannot just be looking for a long simply because we want to see the market reject this zone, right? Trading is reactive and not predictive. In fact, if we go down on the 4-hour time frame, actually what we see is a very bearish market, and we can absolutely not be looking for any longs on GBP USD at the moment because everything is just moving to the downside. And if everything will remain as it is right now, the market will easily just break this zone to the downside. Okay, if everything remains like this, easily the market will break the zone to the downside. However, if that will happen, I will give you guys an update and show you which is the next opportunity that we can be looking for on GBP USD. But until the market will remain above this area, there is the possibility to see the market shift from a bearish market to a bullish market from a 4-hour perspective. And that is exactly what we will be waiting for with students. So we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to shift from a bearish market to a bullish market. And if, and only if, the market will shift from a bearish to a bullish market, at that point, we will add this pair on watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with students for a very good risk to reward and good probabilities for the continuation to the upside and the market to go and test this previous resistance, which is again resistance here. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.